Hello, my students, and hello, everyone. This is Teacher Angel, and welcome back to our online accounting lessons in intermediate accounting. For today, our lesson is all about the exploration and evaluation of mineral resources. Our lesson this week is a continuation of the accounting for the non-current assets, which focuses now on the wasting assets. We will learn how to determine the classification of exploration and evaluation expenditures, account for the wasting asset costs, and compute for the depletion. Thus, at the end of this lesson, the students should be able to determine the standards applicable for reporting of exploration and evaluation of mineral resources, apply the standards in accounting for the acquisition cost, exploration cost, development cost, and restoration cost of a wasting asset, and compute the correct depletion expense. So let's proceed. So the accounting for the exploration and evaluation of mineral resources is embodied in IFRS or PFRS 6. If you can recall, the IFRS stands for the International Financial Reporting Standards, and its counterpart here in the Philippines is the Philippine Financial Reporting Standards, thus PFRS. So what is IFRS RS6 all about? So the objective of this standard is to specify the financial reporting for the exploration and evaluation of mineral resources. And these mineral resources includes those assets that are used up when they are consumed. Examples, we have the minerals, oil, natural gas, and similar non-regenerative resources. So what do we mean if it is non-regenerative? This means that it cannot renew itself, it cannot restore itself back. So once nagamit na, it's fully consumed. Dili na siya mo grow na sad og balik, dili na sad siya mag-reproduce na sad og balik. Exploration and evaluation of mineral resources are defined as the search for mineral resource after the entity has obtained legal right to explore in a specific area, as well as determination of the technical feasibility and commercial viability of extracting the mineral resources. Therefore, during this stage, we are looking at a certain property or a certain area, and we want to know if there are really minerals in that place na pwede nato nga ma-extract and pwede nato siyang ma-convert, pwedeng ma-develop and turned into another product. So, proceed to production. Pero during this time, kay exploration and evaluation pa man, so ato apang gi-check kung naabay technical feasibility and commercial viability. Meaning, pwede pa ba nato siyang further ma-develop? Pwede pa ba siyang further nato nga ma-process? Then we have the exploration and evaluation expenditures. So these are the expenditures that are incurred by an entity in connection with the exploration and evaluation of mineral resources before technical feasibility and commercial viability of extracting a mineral resource. In short, these expenditures are related to this activity wherein we are searching for the mineral resource na pwede siyang himong product later on, or pwede ba nato siyang mabaligya later on. So when does IFRS 6 being applied? So an entity applies this IFRS 6 to exploration and evaluation expenditure that it incurs. it is not applicable, or an entity does not apply IFRS 6 to expenditures incurred before exploration for and evaluation of mineral resources. For example, those expenditures incurred before the entity has obtained legal rights to explore a specific area, or after the technical feasibility and commercial viability of extracting a mineral resource are demonstrable. Expenditures related to development of mineral resources, for example, like preparation for commercial production, like um, building roads and tunnels, they are not recognized as exploration and evaluation expenditures. To illustrate when does this IFRS 6 being applied, at what stage, so we will use this mining value chain. So this diagram here, this illustration is from the book of Assertion, Nina, and Escala. So this is the mining value chain from pre-exploratory activities until the closure of that mining activity. So when we say pre-exploratory activity, so before the exploration, before ta nag-search sa area, before ta nag-obtain og rights para mag-search sa area and find out if we can extract anything from that specific area. So what are the costs here? So it includes costs incurred before the entity has obtained the legal rights to explore a specific area. And what is the treatment of these costs during the pre-exploratory activity? So the treatment of these costs is an expense. Okay. The next stage is the exploration. Exploration going to evaluation, and this is the focus of our lesson today. Exploration and evaluation of mineral resources. So what are these costs that may be incurred during this stage? So these are the expenditures related to exploration and evaluation of the area. Like for example, the acquisition of exploration rights, because before ta pwedeng mag-search, we need to have the rights to explore the area para dili ta ma-trespassing. Topographical, geological, and geophysical studies, exploratory drilling, trenching, sampling, activities to evaluating the technical feasibility and commercial viability of extracting a mineral resource. And during this stage, this is when your IFRS 6 is being applied. As you can see, we have here asset or expense, because accordingly, the entity has the discretion whether it would classify the expenses as an asset or an expense. That's why asset or expense. From the evaluation, we will go to the next. So if we already have the data or the information na naatay ma-extract, mauna ni siya ang mga probable number of units that we can obtain from the property, then we will start developing the area. So when there is already technical feasibility and commercial viability, exploration and evaluation assets are classified as development costs. So at this stage, okay, most likely than not, na tayo makuha from the area, we can classify now that asset or that cost as an asset. And when we already go to the stage wherein we're producing or reproducing, then that's also classified an asset until the closure. So again, this lesson focuses here on this stage, the exploration and evaluation of mineral resources. So we already mentioned those expenses related to exploration and evaluation. Next is when to recognize the expiration and evaluation assets. So the exploration and evaluation expenditures may qualify as exploration and evaluation assets. However, the standards does not provide a clear-cut guidance for the recognition of exploration and evaluation asset. Accordingly, the entity must develop its own accounting policy. Okay, again, the entity must develop its own accounting policy for the recognition of such asset. As a matter of fact, IFRS 6 permits an entity to continue to apply its previous accounting policy provided that the resulting information is relevant and reliable. So, on initial measurement, you're going to record those expenditures at cost, but subsequent measurement will be applying either the cost model or the revaluation model, and you're going to classify it either as tangible or an intangible asset. Again, according to the IFRS S6, the entity shall develop its own accounting policy for the recognition of such asset. In addition to that, the entity may recognize exploration and evaluation expenditures as expenses or assets depending on its chosen accounting policy. And this is in accordance with the illustration earlier. That's why here the entity can classify the exploration and evaluation expenditures as either asset or an expense. So in making the judgment, an entity considers the degree to which the expenditure can be associated with finding specific mineral resources. So let's proceed to the wasting assets. So the wasting assets, or they also call this as natural resources, and as mentioned earlier, these are mineral resources. These are material objects of economic value and utility to man produced by nature, like coal, oil, or precious metals like gold and silver and timber. It is characterized by two main features. The wasting assets are physically consumed and they are irreplaceable. So when we say it's physically consumed, once they're consumed, these cannot be replaced anymore. So dili siya recyclable. Unlike water na pwede magamit balik. The wasting assets, natural resources, that's why they're called as wasting assets, because once nagamit na, dili na nimo siya ma-revive o balik, dili na siya ma-restore. And they are irreplaceable because the natural resources cannot be produced by man. What is the cost of the wasting assets? So there are 4 categories of the wasting asset cost. We have the acquisition cost, exploration cost, development cost, and the estimated restoration cost. So we have to take note that there is no comprehensive standard that is applicable to extractive or mining industry. The only standard related to the mining industry is the IFRS 6 on the reporting of the exploration and evaluation expenditure. So now let's go to the categories of the costs related to the wasting asset. First, we have the acquisition cost. This is the price paid to obtain the property containing the natural resource. So, mao ni ang gibayad para maka-obtain ta og legal rights adto nga specific na area. So, if there is a residual land value after the extraction of the natural resource, the portion of the acquisition cost applicable to the land may be included in the natural resource account. The land may be set up in a separate account, and the remaining costs shall be charged to the natural resource account. And we have to take note that this residual land value, okay, the land value, the residual value of the wasting asset, if we're going to compute for the depletion, the same treatment when we're computing depreciation, the residual value will be deducted from the acquisition cost to determine the depreciable amount. Then you have the exploration cost. So these are the costs incurred before the technical feasibility and commercial viability of extracting a mineral resource are demonstrated. Because at this time, we're still exploring, we're trying to figure out pa if there are really mineral resources in the area. The costs incurred in an attempt to locate a natural resource that can be economically extracted or exploited. It includes acquisition of right to explore, geological study, exploratory drilling, trenching, and sampling. Okay, so before pwedeng magkuha sa area, di ba? First, you have to acquire the properties. You're going to buy the property. And then thereafter, pwede na kang mag-explore. It can result to either success or a failure. Thus, there are two methods of accounting for the exploration costs. We have the successful effort method and the full cost method. When we say successful effort method, the exploration cost directly related to the discovery of commercially producible natural resource is capitalized as cost of the resource property. So the costs that are related to dry holes or those that are unsuccessful, wala tayong na-discover na mga minerals or wala tayong na-extract dito sa place, they are expense in the period incurred. So only those which are successful nga exploration, maora to siya ang i-capitalize. The rest na walay, it turned out na walay nakita, walay na-discover na mineral resources, they are expensed. So this method is used by most large and successful oil entities. On the other hand, we have the full cost method. So it's full cost because all exploration costs, whether we have found mineral deposits or wala, all are capitalized as part of the resource property. So they are capitalized as cost of the successful resource discovery. So the cost of drilling dry holes is part of the cost of locating productive holes. And this method is popular among small oil entities. We also have the development cost. So once we have already identified that the area is promising in terms of the mineral deposits, then we can develop now the area. So this is the costs incurred to exploit or extract the natural resource that has been located through successful exploration. So now we already know that there is really something in the area. So certain na siya. So the development cost may be in tangible form or intangible form. So if it is tangible, like a tangible equipment, it can be touched, it can be seen, nga development cost, like the transportation equipment, heavy machinery, tunnels, bunker, and mine shaft. These are not capitalized as cost of the natural resource, but set up in a separate account and depreciated in accordance with normal depreciation policies. What is being capitalized as part of the natural resource are the intangible development costs, like the cost of drilling, sinking mine shaft, and construction of wells. So going back, what is qualified as part of the resource, natural resource, or capitalized as a natural resource will only be the intangible development cost, because the tangible equipments, heavy machineries, tunnels, they are classified as a separate account as a property, plant, and equipment, and not part of the natural resource or the wasting asset. And lastly, we have the estimated restoration cost. This is the cost to be incurred in order to bring the property to its original condition. So even if you have acquired the property and it's now your own property, you still have the obligation to restore it in its original condition. So ibalik nimo siya sa unsayahang porma sa wala pa nag-explore sa area. This may be added to the cost of the resource property, or it could be netted against the expected residual value of the resource property. So it is capitalized only when the entity incurs the obligation when the asset is acquired. In other words, the estimated restoration cost must be an existing present obligation required by law or contract, and the estimated restoration cost must be discounted. Meaning, dapat upon acquisition of the property, there is already this obligation to restore. Okay? And there are costs related to the restoration. So, i-estimate na daan pagpalit kung pila man ka ang magastuan ni kung ato aning ibalik ang area to its original condition. And then, pag nanatay cost, it should be discounted, meaning you're going to get the present value, and this amount will be added to the cost of the property. So in summary, how do we measure the wasting asset, or how do we measure the cost of the wasting asset? So there are 4 items that you have to remember. So first, we have the purchase price or the acquisition cost of the asset. Okay. Then we have the exploration costs. And remember that it depends on the company if they are going to capitalize it or they will treat it as an expense. So if they are going to capitalize it as an asset, then that would be part of the cost of the natural resource. So if not, if they prefer that the exploration costs will be expensed, so therefore dili nato siya i-add sa cost sa natural resource, dili nato siya i-add sa cost sa wasting asset. Then we have the intangible development cost. Remember that only the intangible form will be capitalized. And finally, we have the estimated restoration cost, and we have to take note that para ma-part siya sa cost, capitalizable cost sa natural resource, kinahanglan existing na ang obligation from the time na napalit ang property, and this restoration cost should be discounted.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching!